Hey YouTube family, welcome back to the All Stars Trading Empire. Welcome back to all our viewers and subscribers. I'm Carrie Ann, and it's a pleasure to be back in this space where we talk a lot about building wealth and acquiring a growth mindset. Now, if you're new to our channel, this is where we aim to educate, elevate, and empower our people as we embark on this journey to financial freedom. So, if this is something that you're interested in, go ahead and hit that subscribe button and definitely join the team of all stars who are taking 2024 to a whole different financial level. Just remember, subscribing does not cost a thing. However, the information that you will get here can actually change your life in a positive way. So let's get right into it. Now, today we're going to be talking a lot about risk management. So we're going to be zooming in on how is it that we can manage our money in the market. So what really is risk management? Now, oftentimes people are misinformed because they believe that in the forex space, they can lose their entire capital in one trade. So today I just want to clear up all the misconceptions so that you are really clear on how to manage your money in the markets. Now, what really is risk management? Risk management is all about how well you mitigate your loss without sacrificing potential profits in the market. Now, if you manage your money well, you will actually be risking what you're willing to lose and you will be gaining what you want to gain. So if you manage your risk to reward ratio properly, right? And in my team, I basically advise my mentees to only risk 1% of your capital on any given trade. Now, we all know that in this space, we can either win a trade or we can lose a trade. However, if you basically risk 1% of your capital to gain 3% or even 2%, then at the end of the day, you will be profitable and you'll be managing your money well because you'll be gaining more in the end. So, proper risk management is vital. Now, how is it that you zoom in on proper risk management? One of the key things that you're going to be needing to focus on is what we call our lot size. Your lot size is very important when it comes on to how much you are risking in the markets. Now, it is very important that you can identify in your MetaTrader 4 or your MetaTrader 5 app where your lot size is positioned. Now, right under market execution, when you go into your MetaTrader 4 or your MetaTrader 5 app, you can see it circled on the screenshot that I have on the screen right here. That's really your lot size. Now, your lot size controls how much money you put into action in any given trade. So it really shows you how much you're risking to gain how much for that given trade. So it's very important that you know how much you are willing to lose in that given trade before you enter the markets. So the lot size really controls how much you can make and it really controls how much you can actually lose. At some point, you will also notice that you can be in the same trade with someone else with the same stop loss, the same take profit. However, because your lot size is different, they may be in more profits than you or vice versa. Now, because your lot size is so important when it comes on to what you're risking as well as what you're making, I'm going to be showing you exactly how to calculate it in this video. When dealing with the lot size, we also want to zoom in on what we call a pip. Now, the term is used to describe the movements between currency pairs in the forex exchange market. That's really what we call a pip. Now, you may be wondering, what does pip stand for? Now, pip represents percentage in point. A pip is the smallest whole unit of price moving up and down in the market, right? So each time the value goes up or down, that's really what we call a pip. It is important because forex trading involves the fluctuations of currencies in that market space. So each time the currency moves up and down, we consider that as a standardized way to express the changes in the market. So by using pip, traders are easily able to understand price movement. So pip deals a lot with price. Each time you see price moving up or moving down, that's really what we call a pip. Don't overcomplicate it. It's very simple. So I know you're now wondering, how is it that you identify PIP on the charts? That's very easy, and I'm going to be showing you exactly how to get it done. Now, when it comes on to PIP, whether you're using TradingView or you're using our lovely software that's called Manara, and if you're interested in Manara, click the link down below as well, guys. It's an awesome software that really scans the financial markets for you, and it provides you with optimal trade ideas. It makes the work easy. All right, so click the link down below if you're interested in getting Manara. Let's get back to the PIP. Now, when it comes on to PIP on the TradingView or the Manara chart, if you look to the right-hand side of your screen, in any of these software, you will easily be able to identify the PIP, right? Even if you're using your MetaTrader 4 app, each time you see that movement up on the chart, it's basically a PIP. Now, when it comes down to the PIP, it's the easiest thing to calculate, especially if you're using TradingView. It will automatically show you how many pips you're using or you're going to be catching if you're going long or short, right? And of course, if you're going long, that means you're going to be buying, and if you're going short, you're going to be selling. Now, when it comes on to understanding pips, let me break it down very simple. For most currency pairs, which involves especially the US dollars, the pip is the fourth number after the decimal point, right? So as you can clearly see here, I've identified the 8, which is the fourth number after your decimal point for that US dollar currency pair. However, the Japanese yen pair, so JPY means Japanese yen, those pairs are weighted differently. And so the pip is really the second number after the decimal point for all Japanese yen pairs. So as you can see, I've clearly identified the 6 right there. So let's take the Australian dollar versus the US dollar as an example. Let's focus our eyes on the chart. As you can clearly see, that value is moving. So you've got 0.72481, and then you see it changing to 0 and 2. Every time it moves up or down, every time it fluctuates, that's either plus 1 pip or minus 1 pip, right? So it's all about the movement in the market, moving up and down, the fluctuations of the exchange rate, right? So how is it that we actually, zoom in on pips and we translate these pips into dollars or pounds or whatever our currency is in the markets? How do you do that? I know you may be wondering. And so we're going to be zooming in on the different types of lot size, because your lot size factors in the dollars or the pounds or the euros, whatever it may be. So it doesn't matter what currency you're trading in, your standard lot is your standard lot regardless. Now, what is a standard lot? A standard lot is really the 1.0 that we generally put in to our MetaTrader 4 or MetaTrader 5 app. It is basically 100,000 units of currency, right? And each time you put 1.00 as a lot size into your trading app, this is telling you that every pip that the market moves, whether up or down, you're going to either be in a plus $10 or a minus $10. It's that simple. So every time the exchange rate changes or fluctuates, you're going to either be plus $10 or minus $10 in that one small movement. Right, so that's really what you consider to be a standard lot, which is really a lot for big accounts. If you got a small account, I would not advise you to use a standard lot. However, you've got a mini lot. A mini lot is 0.1, which is 10,000 units of currency. Therefore, if you're using a mini lot, that 0.1 in your trading app, you'll recognize that each movement, each time the exchange rate of that currency pair fluctuates, you're going to be seeing a plus $1 in your account or a minus $1. So that mini lot is $1 per movement in the pip, right, of the exchange rate. So you've got to factor these in, because it is very important that you understand lot size when it comes down to the money value that it translates into. So if you're using a standard lot, that's $10 per movement. And if you're using a mini lot, it's actually $1 per movement. So far, a mini lot looks a little bit safe. But let's get right into the next lot size, which is the safest one to play, especially if you've got a small account like $100 or $200 that you're actually trying to compound over a period of time. Now, this lot is known as the micro lot. A micro lot is 0.01, which equates to 1,000 units of currency. And that 0.01 is the safest way to play when you've got a small account. I cannot stress this enough because a lot of us are trying to compound our money over time, but we start off small. So if you're starting off small, use the appropriate lot size so that your account actually grows over time. Now, this 0.01 lot size is really going to be factoring 10 cents or 10 pence if you're in the pound land of each movement. Each pip is going to be 10 cents or 10 pence, right, in that market. So it's either going to be a minus or a plus, depending on if the market is going in your favor or if it's going against you. So this is a good lot size to use, especially, as I say before, if you've got a small account. I cannot emphasize this enough because oftentimes people tend to over leverage on small accounts and they, hit a margin call, blow the account in a short space of time. So what I'm trying to help you not to do is to over leverage. So when it comes on to trading, use the appropriate lot size. And I'm going to show you an example which will break it down even clearer to you. So let's say we've got 1,000 US dollars. If we're going to be using a standard lot on that 1,000 US dollar account, the market would only need to move 1 pip against you before you lose that 1% that you're risking. So if you're using a standard lot that leaves zero room for error, it means that you are going to be 100% sure that the trade is going to go in your favor. And oftentimes that's not quite so because you cannot tell the markets what to do. So 1 pip of movement is not the best, right, when it comes on to certain accounts. When you're looking at a mini lot 0.1, the market would need to move 10 pips against you before you lose that 1% that you're risking, which is not bad. But then you've got the micro lot, which is 0.01. So the market would actually need to move 100 pips against you before you lose that 1%, which leaves plenty of wiggle room because when you're doing trading, you cannot tell the markets where to go. You may have a take profit target. However, the market fluctuates. It goes up and it comes back down. So when you do that and you use a micro lot, you give the market enough breathing room for it to hit your target so that you make a profit. Right? So the micro lot is one of the safest one to use. But I know you now may be wondering, how is it that I can accurately calculate my lot size so that I am 100% sure that I will only be risking 1% of my capital? It's down to that question right now. And I'm going to show you what we call a lot size calculator, which is really what I will emphasize that you use to calculate your risk, right? To calculate your lot size before you enter any given trade. So I know you get excited sometimes when you get the trade signals from Manara or any other application that you are using to get your trade signals. You may get excited and you may jump straight into your trade. However, the best thing to do is to have yourself a trading plan. So if you've got a trading plan, you'll know that the first thing that you need to do is to calculate your lot size. So a word of advice to all my mentees, all new traders, all beginners, right? Calculate your lot size before entering a trade. It is imperative that you do this so that you're not risking more than you're willing to lose. Do not randomly enter trades. That's not the best way. Have a plan and stick to it. All right? Your lot size is very important. Your lot size can either break your account or make your account. So at the end of the day, it's your decision to ensure that you're doing proper risk management, because this is a video that's showing you exactly how to get it done. So do the right thing always. I'm educating you here and I'm empowering you for greatness. You can either make excuses and earn sympathy, or you can make money and earn admiration. The choice is always yours. For me, I've already chosen mine. Think about yours. Now, before we get right into the rest of the video, hit that subscribe button if this is something that's been beneficial to you. Like this video, share it with a friend who you want to take with you on the path to generational wealth and financial freedom in this year. All right, so let's get back to our lot size. Now, what you're looking at to use when you're calculating your risk is what we call a lot size calculator. Now, if you have anyone that you're already using, whether it's MyFXBook, that's fine. I'm just showing you the one that I use on a daily basis. Now, this is called a lot size calculator, and I use mine from the website that's known as cashbackforex.com. So on Cashback Forex, if you go into your web browser and you type in Cashback Forex, this is what it looks like. You'll see CBFX. That's your Cashback Forex website. When you go to step 2, if you look to the right hand side of your screen, you'll see the 3 horizontal lines, which is your menu, and you're going to click on that. Once you click on it, it will open up a drop down menu, which is where you want to be, right? So step 1 and step 2, if you have to come back to this video to do it step by step, you can definitely do that as well. So feel free to rewatch until you understand how to use a lot size calculator and understand how to actually factor in lot size to make your wins in the market. So once you've clicked on the drop down menu, step 3 is where you'll select tools, and then from tools you'll select position size and risk calculator for step 4. Then we're jumping right into step 5, where you're going to be filling in the details, right? And this is a very crucial one that you want to pay attention to. All right, so once you click on your risk calculator, this is what you should be seeing on your screen. It's going to be asking you for instrument. Instrument actually means what currency pair that you're trading. So if you click the drop down and you type in the code for the currency pair, so I'm currently using XAU USD, which is gold. Whatever currency pair that you are using for that given trade, you're going to just type it in and it will appear. You can also select the broker, which is, your preferred broker that you're using as well. Now you're going to go down to where it says the currency. So what currency are you trading in? Are you trading in US dollars, Canadian dollars, British pound, euro? You select the currency that you're trading in. Now when it comes down to open price, you're not going to touch that because Cashback Forex is connected to the markets. So it will automatically show you, once you've entered the currency pair, it's going to show you where the market is currently at, which is basically going to be your entry point for the market. And then you're going to have to put your stop loss in. So my stop loss is 2163.42. So that's my stop loss. I've plugged it in and I'm using a demo account for this one. So the account balance is actually 100,000. Whatever your account balance is, that's what you're gonna type in there. Now when it comes on to risk, I'm only risking 1% of my capital, right? And then I want to ensure that I put my contract size. If it is that you're not clear on what your contract size is, if you're using a MetaTrader 4 or MetaTrader 5 app, whether it's an Android or a iPhone, you would basically, click on the quote, which is the currency pair. Once you've clicked on it, you're going to see where it says trade chart or details. You're going to click on the details and the details will actually zoom in on the contract size. So the contract size is actually 100 for gold and I've plugged that in, and then I'm going to go ahead and hit calculate. Once I've hit calculate, right there where you can clearly see the red circle is where you're going to be looking for your lot size. Now, our lot size for this trade that we're going to be entering is 1.062, right? So this is really what we're going to be plugging in to our MetaTrader 4 or MetaTrader 5 app, and I'll show you exactly where to plug it in. Okay, so let's go straight to our MetaTrader 4, and this is where we're going to be plugging the details in. So as you can see right below market execution, I've plugged my 1.06, which is my lot size. I've plugged it in right there. I've dropped in my stop loss, which is the 2163.42, and I've also entered in my take profit, which is 2180.9. Right, so in a trade like this, if you're given any trade, let's say you've been given a trade from the Manara Trade Ideas and Sessions group, this is what you should be doing. You should actually go to your risk calculator first. Once you've done that, then you're going to be plugging all that details in to your MetaTrader 4 or your MetaTrader 5 app. All right, so once you've done that, you're going to be hitting buy by market because this is actually a long position. So we're going to be buy because we've got a bullish bias for this given trade. And then right there and then we've entered the trade and our profits are running. I can already see it. Now, when you are doing all of this, as soon as you've done this, this is basically how you've entered the trade, and I'll basically be showing you how to manage and run trade in our next video tutorial. So don't worry about it. I'll be showing you exactly how to get all of this done so that you are actually successful on your Forex journey, just as how I am successful in the entire process. Now, if you've got anything that you want us to dive into, drop it in the comments and we'll definitely get right into it for the next video. Thanks so much for watching. Thanks so much for tuning in. We love you, we appreciate you, and we hope you found this content beneficial to your entire Forex journey as we go on that path to financial freedom. Remember, you do pay a price for financial freedom, but it's far lesser than what you pay for a lifetime of slavery. More important than how we achieve financial freedom is the why that we've got. So find your why, and I can guarantee you that once you've found your reasons why you want to attain financial freedom, you'll obtain the drive to keep going no matter what. So thanks so much for tuning in. Stay tuned. Remember to put God first in everything you do. We'll be back real soon.